Good day, ladies and gentlemen. So today I want to teach you the turtle soup strategy. Okay, this is an ICT, advanced ICT strategy. All right, so how does this strategy work? Let me give you a breakdown. It's simply a liquidity sweep, a move that comes after a liquidity sweep. Okay, so let's say you have an uptrend, for example, and you have higher high, higher low coming like this. Then at some point you have probably equal highs like this. If you have equal highs or relatively equal highs, it doesn't have to be perfect equal highs. Above that you have what? Liquidity. Above that, okay, you are going to have liquidity, enough liquidity above that. Liquidity usually rests above relatively equal highs and relatively equal lows. Okay, so you're going to have liquidity above that. So once the liquidity gets swept like this and price comes to close below, most times you are going to have a massive sell. Okay, you are going to have a massive sell. So anywhere you have liquidity build up, once that liquidity gets swept, you're going to have price moving aggressively in the opposite direction. That's just what the turtle soup strategy is all about. So the idea is for us to take our trades here and catch this big move to the downside. Okay, so in the same vein, you could have probably a downtrend like this. Okay, you have a downtrend like this. At some point you have let me do that again. Let's say you have a downtrend like this. It doesn't have to be a trend. It can happen at any time. It can even happen during the consolidation. Just know that all you need is for you to have an area where it seems as though price is kind of stuck in a range. Okay, then it implies that there will be liquidity above or below that area. So let's say you now have double bottom like this, or relatively equal lows. Below that, you're going to have liquidity below that. Okay, when the liquidity gets taken out like this, we expect to have a massive buy. Okay, so entering at this point is what we call the turtle soup strategy. It's very should I say complex, sophisticated for you to be able to enter at the right time. It's not that easy. So beginners might find it a little bit difficult, but I'll do my best to see how I can make it easy for you to spot it. Like I said, there are two things you are looking for. The very first thing, you want to see price struggling within a tight range. Okay, now above or below that range, you are going to have what? You are going to have liquidity. Once that liquidity gets swept, now the problem when it comes to this turtle soup strategy is, let's say you have a tight range like this, for example. Now you believe liquidity is resting above this, right? The strategy is for price to break that level and come back this way. But there is a possibility that price can do what? Price can break the level like this, retest the level and move this way, which is not what we want. So how are we going to enter? Okay, the best way I use the strategy is, if price has broken the level and is somewhere here, liquidity has been swept, fine and good. But that does not mean I should jump into the trade, because I don't know what price wants to do. It can decide to still continue moving up. So what are you going to do in that situation? And you have already probably entered a sell trade here, and price comes back here and moves up. There is nothing you can do. We have taken the loss. Okay, the best way to use this strategy is, if price has swept the liquidity, wait for price to come back and close below the level. When price has closed below the level, that's when you enter. You might miss some trades because of that, but at least it's better to miss a trade than for you to take a loss. Why did I say you might miss some trade? Sometimes this candle that's going to come down might be so aggressive that it's not going to break. Okay, it can just happen in 1 minute and just move. Probably it's aligned with a news event. One candle can just move so fast. Okay, in such a case you're going to miss out. But if it does not move like that, once it closes below the level, you can enter your sell trade, place your stop loss above the level, and you are good to go. Okay, So I'll give you some example on the chart. I've marked out some example. Okay, so let's see. Good. This one is coming in the form of a trend moving upwards, but you can see price doing what? Struggling within this range. There's a tight range. Okay, and what happened? Price swept the liquidity above it. Anytime you have a tight range, you're going to have liquidity gathering above or below it. Okay, so you definitely have liquidity here, LIQ. Okay, and what happened? The liquidity got swept. Can you see this? And most times the liquidity sweep comes with a candlestick pattern. This is another thing you can use to confirm. It comes with a candlestick pattern. Okay, if it's a sell trade you are trying to take, it's going to come with a reverse hammer, or what we call a shooting star. It can come with a reverse hammer. Okay, while if it's a buy trade you are trying to take, most times once the liquidity has been swept, you are going to have an hammer. An hammer will form. Then you can enter after the hammer, place your stop loss below the level. Okay, as you can see, after the liquidity sweep, what happened? You had a nice sell trade. So this is turtle soup strategy. Okay, let me zoom in and show you something. Okay, so how would I have entered this trade? I can see that liquidity has been swept and I have my reverse hammer. I will not enter immediately I see that reverse hammer. No, because the reverse hammer did not close under the level. I needed to close under the level, so I would enter right here on this candle. Okay, I would enter on this candle right here, this one. I'll enter on that candle because I'll wait for this candle to close below the level, which it did. As it's closing below the level, I'll enter on the next candle, place my stop loss above, place my stop loss somewhere here. Okay, and take my trade to the downside. Hope it's clear. All right, so let me show you the other example I've got. Okay, now look at this. You can see price struggling within a tight range here. Okay, so it's more like there is a support there that price cannot go below, and price is busy dancing. Then all of a sudden, what did you have? You have price sweeping the liquidity that's built up under it with this. And what did it form? It formed an hammer. Can you see the hammer? This bullish hammer. Okay, so since the hammer formed above the level, I'm going to enter once the hammer is closing. Okay, so once the hammer closes, I'll enter. I can place my stop loss SL. I can place my SL here below, just below the tip of the hammer. Okay, the tip of the wick of the hammer. I can place my stop loss there, take my trade here to the upside. Okay, so basically that's how the turtle soup strategy works. You wait to seek what's it called, equal highs or lows, relatively equal highs or lows. You know liquidity is gonna be resting there. You wait for the liquidity to be swept. Once the liquidity is swept, don't jump in. There are some persons that they want to enter a trade with zero drawdown, so they are looking to catch this particular tip. Don't be that trader. Don't be that trader. Okay, anything can happen. The price can come to this tip and keep going down, and you have already entered the buy trade. So what are you going to do? So you need some confluences. Wait for price to close above the level, then you can enter. I hope that's clear enough. Anyway, if you have any question, please ask in the comments section. If you are a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.